JB here. January 14th, 322 on this fine Tuesday. Talk really quick about the market. Some names I'm looking at, go from there. But take a look at the S&P. Choppy session today, but I would, all things considered, especially over the last couple of weeks, that the range is kind of similar we've had, a $5 trading range on the SPY, but it looks like uh, it's just not a good thing here so far because we reversed the open, found a bounce into the afternoon, and then 2 o'clock, 2:30 we just hit. It was like a button was pushed, and we have some Fed speak that doesn't help things. Uh, but we'll have to see how things play out. We have CPI tomorrow, so considering the reaction from the PPI data today, you would have to think it's got to be cooler than expected, or it's probably have uh, a a date with 560s or so on the SPY. That's kind of well, we'll have to see how it all plays out. But I'm not going to sit here and load up on puts for the pending pending pullback because I'm more on the I still remain optimistic that things are kind of working their way out and we'll start heading higher. But the yields continue to head higher. The U.S. dollar, which actually slightly in the red this today, that's been a huge story. And until all that starts to work its way out and start to normalize a little bit, things are probably going to remain choppy. So uh, as S&P, so you take a look at the SPY, I put 584. Actually, no, that was 582.50. And then now you have the 50-day moving average all the way at 592.33. So still a far way to get there. But if we get cooler than expected CPI data tomorrow, that could be just what the doctor ordered for the markets. Some good things here, and I always like to try and talk about good things, but silver lining, the small caps finally starting to outperform. And I think a lot of it's the US dollar. And it's funny, it's like the headlines come out after the US dollar has been on a massive run and hitting a multi-year highs, because the big benefit, the companies and the sectors that'll benefit most typically from the strong US dollar are the small caps, or at least won't get hurt as much, right? Because I always talk about it, if they have to procure parts and supplies from abroad, strong US dollar means those parts are cheaper, right? Their dollar gets more parts, gets more supplies, gets more materials. On the flip side, if you're a company with a large segment of your business that's international, derives a lot of the revenue from international business, now you have a problem, right? When the dollar is up 20%, 30% against the currency, or 15, whatever percent, then your revenues, you're transacting in that country's currency, and then when it comes back to the U.S., it converts back to the dollar, and that dollar's a heck of a lot more expensive. So it makes these companies, it hurts their margins, and you see a lot of these and revenues as well. You see a lot of these companies, they have hedges on forex hedges, but who knows? It's tough to how much is that going to offset it, especially if the dollar continues to rise. So I think a lot of that you're starting to see kind of this trade where people are looking to say, wow, the U.S. dollar may have an impact, and we'll probably hear it on the earnings tomorrow. And I'm sure this earnings season, the U.S. dollar and will be one of those things that a lot of these companies will be talking about. But good sign here for small caps. I would love to see the small caps outperform finally. Um, and there's the chart of U.S. dollar, and you take a look. I mean, we'd have to get to 2022. We were in the middle of that higher for longer situation where we were still waiting. People thought rates were going to get cut at a rapid pace. That didn't happen. Extended to 2023, and then 2024. Finally, we got in September. But take it at the U.S. dollar just right near those highs. If it starts breaking up to 112 or so, that could be problematic. All right, so that's so I always say I don't have my bear suit on. Is there a possibility? I think if we get an inline number on the CPI data, we're down to 575 on the SPY tomorrow, and maybe that'll set us up for a nice rebound, bounce, like an opportunity for buy the dip. If it's severely, if it's in line, I think we probably maybe still probably a little bit of red, and then if we're solidly totally miss expectations, cooler than expected, then maybe we can find a bounce and work our way over the 50-day moving average into end of the week. Also, we have earnings tomorrow, so bank earnings. That I don't know how much that'll move the markets either, but commentary is going to be important, especially when you have some of these CEOs on banks are almost like oh, pretty much Secretary of Treasury positions, because when they talk about things outside of Bitcoin, like Jamie Dimon, it tends to move markets. All right, so that's overall market. So individual names, and this is when the market's chopping around like this, to try and find some put hedges to offset call positions, or even to try to play for downside. It's tough when we have these bounces. So my forte is not scalping stocks. I mean, I wish I was a good scalper. I'm not, when I get in a trade, I'm not looking to get a 5 to 10 minute scalp. Although if it's up a couple 100% in a matter of that 5 to 10 minutes, so be it. I'm usually looking for a longer duration trade, unless I'm in weekly options that expire the same day, right? So, today I'm looking, and as we start to reverse the gains, I'm trying to find some names that I think might pull. And MDB is always on the radar, and then I'm looking at some of the other names like at ServiceNow, but those all they're not down too much. And then I have to think that if the market would really have to pull for those names to pay on the put side, so I was I kind of passed on adding puts, but then this afternoon, the more I start thinking about this international revenue story in the U.S. dollar, and then you look at some of the big cap names, and you've seen what happened with Apple recently and their concerns in China, which is always headlines of sales in China and Apple, and now and Tesla as well, right? And it always sometimes it impacts the market, the stock, but then those are years ago, and every year it happens, the stock is higher in a couple weeks, couple days, couple months. So you look at Microsoft, and that's my premise a little bit, getting some spec puts, because I was looking for names, and I typically don't trade the mega cap names because my mindset is always like, if everybody's in the same side of a trade, then how can it be a right trade, right? So uh, that's why I try to find names that are, when I'm looking for positions, less covered, because there's more opportunity for folks not to understand the story, right? And then that's your edge. Well, I'm not sitting here with Microsoft, but it hasn't been in the 390s uh, since back in August. So I mean, it's a big, uh, you know, I don't know how to. I'm not saying it's going to go into 390s this week, but I think if there is an opportunity for the CPI to miss, and it does miss, and then the dollar soars, and same with yields, I could see a 2.5, 3% move in some of these mega cap names. So if that happens, I looked at the puts. I was going to get the 397.50s, 395s are less expensive on a risk war basis, because if it moves, it's not going to matter which ones I have, and I'd rather have less risk to make more reward. So that was the premise there. Do I think Microsoft's horrible company, or it's going to tank? I hope not, right? Because then a lot of my other call positions would probably not do well. But that was kind of the thought process there. So we'll see what happens. Also, of course, ironically enough, I don't know if some of the reason the stock was selling off, but so was Apple and some of the other names. But later, after I got the puts, it looks like CNBC has a memo from the company saying they're going to pause hiring in one of their segments. Sometimes pausing hiring is a good thing, right? If you're a shareholder, sometimes you like to see them, hey, let's work on our expense. All right, so that was the trade today. TripAdvisor, small caps were rallying today. So TripAdvisor, which gave back the broke under the 15s, and gave back a lot of it yesterday and Friday. Starting to, well, not yesterday and Friday, Wednesday and Friday of last week, starting to bounce. Closed pretty much flat yesterday, and then today almost up to $15. So my January strikes still have a shot here. Maybe if we get decent numbers tomorrow on the CPI, small caps can continue to outperform, and Trip can really start to take off and recoup at least those levels that was hitting 1550, 1560 2 weeks back, and then off to the races. And then just look at a short-term chart. It's just it sold off on there was no news, no catalyst. And then it's funny, the market was down. I mean, small caps weren't, and Trip sold off, and now it's down again, and Trip is rallying. So good sign, back over its 50-day moving average. Where's my other stuff here? Oh, Solar Edge looked great this morning, all the way up to 15, and that one just down 2%. It's still over its 50-day moving average. Still hopeful there. Teladoc, I mean, it's totally disappointing. Amazon, they announced a partnership with Amazon. They're going to be on their Healthcare Service Connect program. So it should open them to more opportunities for revenues and customers, things like that. Stock gapped up. It was over 10, I think it was 1080 in the pre-market. Gave some of that back, then opened in the green. Then it just melted for the rest of the day. It's down 4% now. So you take a look at the chart, it almost looks like there's a golden cross possibility, which is when the 50-day crosses above the 200-day moving average. It'll happen at some point. Hopefully it's going to happen soon. And once that happens, then maybe that's the go signal. That's Teladoc. TravelZoo, at some point I'm going to add some strikes here. TravelZoo's down 6 sessions in a row, but kind of muted. So the other thing, it's under its 50-day moving average, but I'm going to get some calls into its earnings. Some other names I've been looking at, and I keep posting the chart in the chat room. Caterpillar, right? It's like that one, and I don't have my chart here. That one's well off its highs, and you have to think these names are going to get the market's going to start pricing in higher demand for for their products and what have you because of what's going on in California. So you have names like that. And then I brought up URI this morning. And of course, they announced an acquisition. So the stock spiked. That gave back the gains in the morning. And then it's starting to bounce here. It's another name. URI is another name I'll be looking at for possible calls. But the premiums are expensive, only monthly strikes. So it makes it tough to trade. Exact Science. I just, some days you wish you were like not watching a move on a stock because uh, I wish from the 1 o'clock to 2 o'clock yesterday I wasn't watching Exact Science because once it started to spike after its conference, I went and got the calls and I've done it before and I've had stocks rally 10-15% from that. So I'm not gonna just chalk it up to a lesson. I probably uh, maybe should have tried to get on the call and listen. I just didn't have a chance. But it's sitting here. It looked great this morning. It was up into 59s, then just melted. Similar, it's a very divisive name. There's people who don't think they're going to be a solid company and profitable for 5 years, which I think that's some of the reason it's negative. But I still love this story, but I'll be patient adding more strikes there. I think that's it. Roku disappointing under that 75 50-day moving average. It looked like it was going to reverse all the way up to 77 and change at 10 o'clock. And then now it's sitting here at 74.40. It's going to need some kind of catalyst to get going again. And I think that's it, folks. I'll be back on audio. Let's have a great day. Rock and roll.